Nuclear energy is having a renaissance driven by two massive forces converging all at once, and this makes for a very compelling investment story. Everybody already knows about that first force. It's the second part that is a bit more hidden and makes these stocks all the more appealing. That first driving force being the increased energy demand to power AI data centers. Now, solar and wind can't generate the uninterrupted baseload power these facilities need around the clock. Nuclear can. The tech giants know this. Microsoft, Google, and Amazon have all signed nuclear power agreements in the past year. The second driving force is geopolitics. We're living through the most significant global rearmament cycle since the Cold War. The U.S. is modernizing its nuclear arsenal for the first time in decades. NATO spending is surging, and a tiny group of companies hold sole source contracts to build the systems that nobody else on the planet can build. These are two distinct tailwinds that are offering direct benefits for a select group of nuclear stocks. That's why today I'm sharing 5 stocks best positioned to rise from these unique catalysts. By the way, I'm Steve Reitmeister, partner at WallStreetZen and former editor-in-chief at Zacks.com. Now, drawing on over 40 years of investment experience, I helped build our quant rating system to review every stock across 115 different fundamental factors. Before we get started, tap that like button if you enjoy stock picking videos like this one. It tells me to make more like it in the future. Now let's get into that first ticker benefiting from nuclear today, which is defense giant Northrop Grumman with a symbol NOC. This is one of the very few companies in the world that can build nuclear-armed intercontinental ballistic missiles. Full stop. Their B-21 Raider stealth bomber program, their nuclear command and control systems, these put Northrop at the absolute center of America's nuclear deterrence strategy. We are living through a period of elevated global tensions, leading to a massive expansion of the defense budget for the United States. Following the Hague investment plan signed by NATO members last year, the U.S. is set to increase defense spending to 5% of GDP, the highest level since the early 1990s. The country is also modernizing its nuclear arsenal for the first time in decades. Every one of these programs has Northrop's fingerprints all over it. The stock is up considerably over the past year, but our interest today is finding stocks to buy now with even more upside to come. This is where our Zen Ratings quant model comes into play. After the full 115-factor fundamental review, Northrop scores an A rating, which means a strong buy recommendation. What's most impressive is the broad strength of this component grade, scoring the top 20% for growth, momentum, safety, and financials. This is a well-balanced and appealing fundamental profile. Now, this isn't a speculative bet on a hot trend or a turnaround story where you're hoping management finally gets it right. This is a fundamentally sound company where revenue is up, earnings are up, its balance sheet is clean, and enjoying some serious tailwinds. It's not all positive, so let's discuss 2 concerns you should be aware of. Now, any major shift in U.S. defense spending would hit Northrop, but honestly, that seems unlikely, at least in the short run. And this is not the type of stock that doubles in 6 months. This is a blue chip pick in the group where patient investors are consistently rewarded over time. But overall, it's clear that Northrop Grumman is in excellent position to benefit from the massive increase in defense spending. Plus, our proven Zen Ratings model supports this positive view with a coveted strong buy rating. Let's move on to stock number 2 in Huntington Ingalls Industry with a symbol of HII. You may have heard the headlines of the USS Gerald R. Ford is at the centerpiece of the U.S. naval operations in the Middle East. It's a nuclear-powered aircraft carrier, the largest warship ever constructed, and yes, Huntington built it for the Navy. Not just every Gerald R. Ford class carrier, but also every Nimitz class carrier and every nuclear submarine, all of them come from Huntington Ingalls facility, and they are the only company in America that does it. Not the primary company, not the largest company, the only one. Full stop. The Zen Ratings labels these shares with a B grade, which means buy rated, and don't let that fool you, as it's actually in the top 6% of all stocks analyzed by our Zen Ratings model. Drilling down to the component grades, they score incredibly well in the top 20% for value, growth, and momentum. Safety is even higher in the top 6%. This is a well-rounded and attractive fundamental profile, truly a high-quality, stable operator with strong price support and high growth. Exactly the kind of stock benefiting from rising investor focus on the best defense stocks. The main risk with a company like this is, first and foremost, shipbuilding is complex and cost overruns are a real part of the industry's history. And as with any pure-play defense names, federal budget shifts can create headline risk. But the competitive moat in nuclear-powered ships and submarines is unlike anything else on the list today. You cannot replicate what HII does, and that irreplaceability has real investment value. Before we move on to the next high potential nuclear stock, make sure you've subscribed to our channel so you don't miss any of my future videos. With stock number 3, we move back to another bellwether defense play in Lockheed Martin with a symbol of LMT. Now, if Northrop builds the warhead and HII builds the carrier, Lockheed Martin delivers the weapons. Lockheed's fingerprints are all over the nuclear weapons delivery systems that underpin the American deterrence strategy. And here's the thing. This isn't a peacetime defense budget anymore. Ukraine is still burning. Taiwan is on a knife's edge. The Middle East is a powder keg. All the while, NATO allies are scrambling to hit their 2% of GDP defense targets they ignored for decades. We are living through the most significant global rearmament cycle since the Cold War, and Lockheed Martin is at the very center of every single one of these conversations. When the world gets more dangerous, the contracts don't slow down, they multiply, and Lockheed benefits. This certainly explains why the stock is up nearly 50% over the last 3 months. But our quant rating system suggests there's still more upside ahead. The Zen Ratings has Lockheed as a B overall in the top 8% of all stocks reviewed. Value, financials, and momentum score highly as well in the top 15% of all stocks. Even better is the top 4% rating for safety. That safety grade is the one that deserves to be highlighted because this is one of the most protected positions you can take in the defense space. Wall Street message is a bit more mixed on Lockheed's outlook. Right? Some analysts are quite bullish, like Charles Minerva of Susquehanna. Now, he's in the top 3% of all analysts based upon his stock picking track record, and he's quite bullish. He rates it a strong buy and believes the stock could see strong price upside in the coming year. Unfortunately, not every analyst convinced. The overall consensus among Wall Street is a hold, and some are downright bearish, like Loa Papanek of Goldman Sachs, who actually rates it a strong sell. But I believe there are still plenty of reasons for Lockheed to be on the list today, most notably the fundamental prowess on display in their Zen ratings, plus the impeccable safety grade. History shows that when the fundamentals are this strong, the stock will continue to outperform. Before we get to the last pick in the video today, a little quick reminder. Every Monday, I share my stock of the week with investors. This blends the outperformance found in the Zen Ratings quant model, along with my greater than 40 years of investing experience. So get my future stocks of the week for free by clicking the link in the description or scanning this QR code. All right, you're probably thinking, how can you talk about nuclear without talking about uranium? All right, fair point, and here's the catch. Uranium industry itself is struggling right now with an F rating in our Zen industry ratings model. But don't tune out just yet, because I'm about to show you the one uranium company that strips away most of the unattractive risks tied to the industry. That brings us to stock number 4, Uranium Royalty, with a symbol of UROY. This one offers exposure to the nuclear fuel that powers the world. They don't run the mines, they own royalties on some of the most important uranium projects globally. We're talking about McArthur River, Cigar Lake, Reno Creek, Langer Heinrich, and more across Canada, the US, and even Namibia. That means they get paid whenever these mines produce uranium without the risk of running the operations themselves. Now, if nuclear energy keeps scaling, which strongly seems to be the case, then Uranium Royalty Corporation is one of the companies that cashes in on every pound of uranium mined. The company has benefited from the recent push towards nuclear energy and rising uranium prices, with the stock tripling in 2025 from its lows. Gladly, the Zen Ratings shines a light on how Uranium Royalty should keep outperforming in the months and years ahead. Now, their B rating overall puts them as a buy recommendation in the top 20% of all stocks analyzed. Growth is the standout category, ranking in the top 15% of all stocks in our system. This is evidenced by the fact that revenue jumped 2.5-fold last year, and earnings growth followed the same trend. Sentiment is strong as well. Ranks the top 9% of stocks we track, which means the smart money is already clamoring to snap up these shares. Now, let's be clear about the risks. This is still a small cap stock, and uranium hasn't been in favor in quite some time. Then you have the idea that uranium markets are historically volatile, and mines can face multi-year shutdowns. While the company is a royalty play and avoids direct operational risk, the commodity price risk still remains. Now, having said that, the fundamental signs point to this being a high potential investment opportunity. Plus, the business structure is well designed to benefit from any continued increase in uranium prices while avoiding the pitfalls that come from being a mine operator. I saved the best for last, that being stock number 5 in Jacobs Solutions with a symbol of J. This is a key player in the global nuclear industry. They support the full nuclear life cycle, from new reactor builds to small modular reactors to decommissioning, cleanup, and waste management at government and commercial sites. Jacob provides engineering design, project management, construction support, safety, and advanced technical solutions that keep complex nuclear programs on track. If nuclear energy for the grid, advanced reactors, or government programs is going to scale safely and efficiently, Jacobs is one of the companies that will make it happen. Jacobs Solutions earns an elite A grade from our Zen Ratings system. That means a strong buy, and stands out as one of the top companies in the engineering and construction space. Growth is the star component grade, ranking the top 8% of all stocks. That's no surprise given that Jacobs has delivered consistent growth over the past 3 years, fueled by a slew of new contract wins. Financials earns a B rating, putting the top 15% of all stocks, thanks to impressive return on equity, highlighting the company's efficiency. Now, Wall Street sentiment is mixed, split between strong buy and hold ratings. But the average 12-month price target still points to roughly 25% upside from current levels. Notably, Andy Kompolitz from Citigroup, a top 1% analyst based on his stock picking prowess, has a strong buy rating with the target price more than 40% above today's level. On the risk side, Jacobs is heavily tied to project wins and government contracts. Thus, any delays or missed awards could hurt results. Macroeconomic conditions also matter. A slowdown in infrastructure investment could significantly impact the company. But fundamentally speaking, it is hard to picture continued expansion of nuclear energy without Jacobs being a direct beneficiary. On top of that, you have the impressive Zen Ratings profile, which has historically pointed to stocks that outperform the broader market by more than 3 to 1. All right, so those are the top 5 stocks worth watching in the nuclear space. Which ones are you going to add to your watch list? Or do you have another nuclear stock I should talk about in my next video? Please leave a comment. I'm here to hear what you have to say. And if you want to explore another soaring industry, then check out my next video where I talk about 4 AI defense stocks that could surge in the coming months.